Hello, I'm David Chester with 9 at 9, brought to you by interest.co.nz. This is where we get everything you need to know in 90 seconds at 9 o'clock, with news that the Aussies have renewed their reputation as being intolerant for reform or change. But first, China's factory sector unexpectedly shrank for the first time in nearly 2.5 years in January, and major manufacturers are seeing more softness ahead. And that's what an official survey showed, which mirrored an earlier survey of mid-sized companies. It also raised expectations that policymakers there will take more stimulus action to forestall the sharpest slowdown. However, we should also note that their services sector is still expanding quite well. Staying in China, following last year's spate of food safety issues with dairy products, China moved to register importers. It turns out more than 1,800 have now been granted registration, with New Zealand representing just a tiny proportion. In Greece, their radical rhetoric does not seem to be working with its creditors. German Chancellor Merkel ruled out yet another debt write-down for Greece over the weekend, and an ECB member threatened to cut off funding to Greece banks if Athens does not agree to renew its bailout package. The calls for a rollback elsewhere will not be helping. Greece is hoping socialist France will be its big brother friend. And over the weekend, the Russian central bank has done a sudden U-turn, cutting its official interest rate from 17% to 15%, just a week or so after it raised them to defend the ruble and tame inflation stoked by international sanctions related to the Ukraine conflict. There is real confusion in Moscow on how policymakers should respond to their crisis, and there seems to be panic in the business community. In Australia, the size of the stunning election results in Queensland on Saturday night has only emphasised that the country has no appetite for economic reform or any change that might involve the cost. They are becoming the poster child for can kicking. And Fairfax have headlined their 2015 economic survey as Australia adrift. In New York, benchmark US Treasury 10-year bond yields are at 1.64%, down 10 basis points on Friday. It is likely we'll see a reactive shift locally when New Zealand swap markets open here. And the oil price rose dramatically at the end of last week, up to $48 a barrel, with Brent crude at $52 a barrel. There seems to be two reasons: an upsurge in ISIL activity near one of Iraq's main oil-producing centres, and a sharp rig count fall in the US, the most since records began in 1987. The gold price rose sharply in late trade on Friday, in fact after the London markets closed, and it is up to $1,283 an ounce. The recent volatility in the gold price sort of suggests markets don't really know how to price it in the current environment. We start today with the New Zealand dollar holding last week's lower levels, is at just 72.4 US cents, 93.6 Aussie cents, and the TWI is now just under 76. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.